Hi, welcome to the Crypto Republic. Before we begin today, if you're serious about staying ahead in this once-in-a-lifetime financial shift, make sure you like this video, drop a comment, and subscribe to the Crypto Republic. Hello, XRP Army, and welcome back to the Crypto Republic, your go-to channel for the latest high-energy updates in digital assets. Bringing you updates every day at 9 a.m., noon, and 7 p.m. Eastern Standard Time. Welcome back, ladies and gentlemen, to another episode of the Crypto Republic. And today's video, we're exploring a major development that's quietly shaping discussions around XRP and the broader crypto ecosystem. Yes, the market's been volatile recently, and prices are down. Some analysts describe it as a potential prolonged bear phase. But history shows that interesting trends often emerge during periods of uncertainty. BlackRock has made a move that has attracted attention in professional circles, and it involves XRP. By the end of this video, we'll explore why analysts reference 1,000 XRP as a notable threshold when studying wallet distributions and network activity. Nothing here is financial advice, ladies and gentlemen. This is informational content, drawing on historical context and publicly available data. Always do your own research. Let's take a look at lessons from history and market cycles. Markets and financial systems have always moved in cycles. In ancient Rome, ladies and gentlemen, citizens stored and traded grain based on seasonal expectations, which affected local economies. During the Dutch tulip mania in the 1600s, speculative trading highlighted how excitement and novelty can influence value, while outcomes remained predictable. Even in modern finance, the 2008 global financial crisis showed that early adoption of new tools and careful observation could provide insight into economic behavior. In the crypto ecosystem, analysts suggest similar patterns may occur. XRP and other blockchain networks may play roles in emerging multi-chain and tokenized systems. I want you to think of it like the early railroads in the 1800s. Infrastructure developed first, and its potential became clearer over time. XRP is often discussed in similar terms, as part of a developing digital asset network. Let's discuss BlackRock's multi-chain exploration. Much of the coverage focused on headlines, but the deeper story is in infrastructure development. BlackRock has expanded multi-chain capabilities beyond Ethereum. XRP Ledger, or XRPL, is referenced as part of a broader research into distributed ledgers. BlackRock filed for a staked Ethereum trust in Delaware, but analysts note that their initiatives extend across multiple blockchains. Products like BID, BlackRock's tokenized U.S. Treasury money market fund, are live on 7 chains, including BMBB, and discussions suggest XRPL could be included. Institutions may hold BID in third-party custodians, and it can be used in ways that explore liquidity and capital efficiency. Primarily in professional or institutional contexts, deposits of 500 million plus have been observed, even during a period of market volatility, highlighting interest in testing multi-chain and tokenized systems. When I first noticed BlackRock's multi-chain strategy months ago, I began paying closer attention to wallet distributions and network activity. Personally, I tracked XRP holdings over time to better understand adoption patterns, much like an analyst studying emerging infrastructure. This is purely my experience for educational purposes. It's not a recommendation or advice to take action. Observing early trends can prove insights into how digital assets networks develop, similar to watching early cities or railroad networks grow over time. Larry Fink 2025 Letter and Tokenization Vision. Larry Fink, CEO of BlackRock, outlined in his 2025 letter a vision for tokenization. He described the potential for blockchain technology to support tokenized visions of stocks, bonds, ETFs, and real estate. Analysts note that the tokenization could enable faster settlement, global access, and increased liquidity, though it remains in early stages of exploration. BlackRock's approach using securitized and BID illustrates how institutions are investigating new blockchain applications. This is an observation of trends, ladies and gentlemen. It's not a recommendation or suggestion to take action. So understanding 1,000 XRP. Why do analysts reference 1,000 XRP? Well, data shows most wallets hold under 100 XRP. Many retail holders have between 1,000 to 5,000 XRP. Analysts study those thresholds to better understand network adoption and distribution patterns. It's analogous to studying urban development. Researchers analyze which areas grow first. BlackRock is collaborating with several partners: ARK, Blockchain Capital, Hamilton Lane, Jump Crypto. They also work with Securitized, which supports tokenized fund initiatives including XRP. Securitized has an SBA deal valued at $1.25 billion, illustrating institutional interest in exploring blockchain infrastructure. These initiatives focus on studying adoption, network activity, and operational efficiency, rather than implying financial outcomes for individual holders. XRP wallet statistics show approximately 60% of wallets hold 0 to 20 XRP. Roughly 730,000 wallets hold 1,000 to 5,000 XRP. Studying wallet sizes and distributions provides insight into how users interact with the network and may help analysts track trends over time. Let's look at retail versus institutional activity. Retail participants often focus on daily network activity, while institutions may conduct research or infrastructure testing historical patterns, suggesting that studying these behaviors can help understand system development without implying any personal financial advantage. Let's look at historical lessons and market patterns. Looking at history, Rome, the tulip mania, the 1600s, and the 2008 crises, we see that observing systematic trends and cycles offers valuable insights. Some analysts examine wallet distributions and network activity to better understand adoption patterns, while acknowledging uncertainty remains high. This overview is focused on understanding trends, historical context, and technological adoption. XRP and multi-chain systems are part of broader research into digital assets infrastructure. Always approach digital assets with caution. Research, review official documentation, and seek multiple reliable sources. This content is for informational and entertainment purposes only and should not be taken as financial advice. Always do your own research and consult a licensed financial advisor before making investment decisions. Remember, the game is changing, and those who understand it first will benefit the most. Make sure you're on the right side of it. You have two choices. You can be like the crowd, reacting after the move, rationalizing why they missed it, telling themselves they'll never let it happen again, or you can be the one who saw behind the curtain, the one who understood the infrastructure shift, the one who positioned early, not randomly, but intentionally. Because some moments in history are loud, but the ones that change everything are quiet, right up until the moment they're not. And this is one of those moments. Do not blink, because the world is distracting you with noise, while XRP continues developing behind the scenes and building the momentum in the broader digital asset landscape. Stay sharp, stay informed, accumulate knowledge. Your move now will be remembered. This is not the end of the story. This is just the beginning. This opened your eyes. Smash that like button, ring the bell, and leave a comment with your thoughts. Turn on notifications, and most importantly, subscribe to the Crypto Republic. We break down the major global banking trends, shaping digital assets today, giving you context, clarity, and research you can use. Don't just watch history happen. Stay informed, stay ahead, and stay in the Republic.